When you look at Tesla, what do you really see? Is it just another car company fighting it out over vehicle sales and profit margins? Or is it a revolutionary AI company that's on the verge of creating completely new industries from scratch? That's the central puzzle of Tesla's valuation, and depending on your answer, the numbers get pretty wild. Okay, let's get into it.
And when I say wild, I mean it. Some very serious analysis puts Tesla's future value, in a bear case, at around $90 billion. But on the complete other end of the spectrum, you have models projecting a value of over $100 trillion. So how can one company possibly hold both of those realities at the same time? Well, it turns out it all comes down to two completely different ways of seeing the business.
So first, let's explore that absolutely astronomical bull case. It's a vision that isn't really about selling more cars. It's about a really powerful financial concept that, if it actually works, makes a $1 trillion valuation look like Trump change.
This entire vision really hinges on what analyst Cernan Basher calls creating value out of thin air. Now that sounds like some kind of magic trick, right? But it's actually a fundamental engine of how the stock market works. So what is he talking about?
It's a concept called capitalization. In plain English, it's just the process of taking something that generates money, an activity, an idea, a service, and turning it into a company whose shares you can actually buy and sell. You're basically putting a price tag today on all of its potential future earnings.
Let's make this super simple with an example. Imagine a lemonade stand. Right now, it's just an activity that makes you $50 a week. It's uncapitalized. But then you form a company. You project out what you think it's going to earn in the future, and you sell a 10% slice of that company to an investor for $1,000. Boom. Just like that, you've capitalized a simple activity into a business with a $10,000 market value. And you can see this exact concept at massive scale with some of the biggest companies in the world. I mean, think about it. Starbucks didn't invent coffee. They capitalized the experience of drinking it. Netflix capitalized home entertainment. And look at NVIDIA right now. They are literally capitalizing intelligence itself by building the engines for AI. Each one turned a pretty simple activity into a $1 trillion industry. So this leads to the next big question. What's the next great frontier for capitalization? According to the bull case, it's the single largest uncapitalized asset on the entire planet: human labor. The global market for human labor is estimated to be 5 to 10 times larger than the whole oil and gas industry. It's a colossal part of our economy, and yet it has no stock ticker.
And this is where the Tesla bull case goes into the stratosphere. The argument is that the Optimus robot isn't just another product. It's the tool, the key really, designed to finally capitalize human labor. The math here is just staggering. If they can deploy 100 million robots, the potential value created could reach $100 trillion. This is the vision that separates Tesla the car company from Tesla the world-changing AI giant.
Okay, deep breaths. That was the mind-bending vision. But a vision is not a reality. So let's bring this all back down to earth. To get to that future, Tesla has to navigate a minefield of real-world challenges, and it all starts with the robotaxi network. A successful robot taxi launch isn't something you can just flip a switch on. It's going to require flawless execution. According to analyst Joe Bakhti, they need a critical mass of cars on the road, so you're not waiting forever. They need to prove there's a clear path to getting the price under $1 a mile. And maybe most importantly, they have to report their safety and operational metrics transparently to build trust. Any failure here could delay that grand vision for years.
This execution risk creates a massive range of possible outcomes. A 2027 analysis from Chandra shows this perfectly. In a bear case, where growth stalls and FSD doesn't deliver, Tesla is valued at just $90 billion. But in a bull case, where execution is strong, that value jumps all the way to $560 billion. That's a huge swing based on just a few years of performance.
So what drives that huge swing? Well, it comes down to these key metrics right here. The bear case assumes vehicle deliveries pretty much stay flat and FSD revenue is minimal. The bull case, though, assumes strong growth in deliveries, higher margins, and FSD revenue actually hitting $9 billion by 2027, with Optimus just starting to contribute.
So, what you have is this tale of two Teslas. One is this incredible vision of capitalizing labor and transportation. The other is a story of manufacturing, logistics, margins, and regulatory hurdles. The difference between them, it comes down to a single crucial factor. And this brings us right to the heart of it. What you measure is what you see. If you look at Tesla as an auto company, you're focused on vehicle deliveries and gross margins. Pretty straightforward. But if you see it as an AI company, the metrics change completely.
Now you're tracking FSD safety data, the size of the robotaxi fleet, and the progress of Optimus. The entire valuation puzzle really just comes down to which of these two identities the market believes in.
And that brings us to the core of the puzzle. The Chandra analysis puts it perfectly. Autonomy is the swing factor. Whether the market perceives Tesla as a simple car maker or a groundbreaking AI platform depends entirely on its progress with full self-driving.
So think of Tesla's valuation not as a single number, but as a spectrum. On one end, you've got the $90 billion car company. On the other, the $100 trillion AI giant. And every successful FSD update, every city that approves robotaxis, every task Optimus masters, these are the events that push the lever, sliding Tesla's perceived value further and further along that spectrum toward the AI future.
Okay, now that we understand the puzzle, what should you actually be watching? Let's forget the daily stock price noise. Here are the real signposts that will tell you which direction that lever is moving.
This is your toolkit. Instead of stock prices, watch the robotaxi fleet size and the price per mile. Track the safety data, specifically how many miles the system drives between human interventions. Follow the FSD subscription revenue, and look for tangible progress from Optimus in real-world pilots. These are the numbers that matter, because they are the real-world proof points that separate the grand vision from the on-the-ground reality.
Ultimately, this brings us to the final question. Is Tesla's AI future a high-stakes gamble on unproven technology and regulatory luck? Or, if you believe in the power of capitalization, is the unlocking of labor and transportation a historical inevitability, with Tesla simply being the company to get there first? The answer lies in the data, and now you know exactly what to look for.